Without further ado, we want to start with a very important session, and we are going to turn into the African Energy Chamber's flagship report, that is the 2026 State of African Energy Outlook. So, for those who know, the report is a comprehensive review that highlights the energy landscape in Africa. And I'm going to ask you to help me welcome the speakers of the session. I'm going to start with Ms. Meredith Bennett. She's the Senior Director for Consulting at S&P Global Commodity Insights. I'm going to also invite Mr. Preston Cody, the Global Head of Upstream and Energy Analytics Consulting, also at S&P Global Commodity Insights, and also Mr. Simon Wood, Senior Director for Gas and LNG Consulting at S&P Global Commodity Insights. And lastly, but not least, I'm going to invite Mr. Verner Ayukegba, the Senior Vice President at African Energy Chamber. Please let's put a round of applause for our speakers. And I'm going to pass the word to the stage. The floor is yours. Thank you.
Okay. I'm not sure if I should start here. I should just talk here. Anyways, thank you so very much for coming to this particular deep dive. Before I start, I want to give special thanks to this team which is here. We work tirelessly, but mostly them than me to be able to put together what is a really comprehensive deep dive with respect to the outlook for the oil and gas and energy space in Africa. So, what the report or what the African Energy Chamber is seeking to do is to provide a platform with actual data, with concrete data to be able to buttress whatever our advocacy is. We also want to be able to help senior level executives from a strategy perspective be able to understand what is likely to happen in the market, what is likely to happen across the board in African countries. And so really, it's very important for us that we have this partnership and we're able to drive a lot of what it is that we think and advocate for around poverty numbers, around energy accessibility, around how you can double down on financing gas and all of that kind of stuff. I will just talk a little bit about what we see at the chamber with respect to above ground risk significantly. If you look from north to south or from east to west, certainly there are a whole bunch of elections that are taking place. Of course, you can have the best geology that is possible in that sense, but if at all you don't take care of the above ground risks in that sense, then you have an issue. I'll start with, I'll just go randomly. I'll start with Gabon, for example. Government changes. We just recently had an election, which is the legislative election that has been done now. It is very likely that given now that we are out of the transition with these particular elections, you're likely to see them double down and trying to drive pretty quickly a lot of changes with respect to legislature. Everybody on the continent is very much aware about competition, which is coming out of Guyana, Mexico, and some of these other basins. So you're likely to see that in a place like Gabon. Congo, elections coming later this year. Don't expect, at least at the chamber, we don't expect anything that's going to significantly impact the operating environment in that sense. Would like to see more changes. They're trying to double down on gas and to be able to develop more gas onshore plays as well. But again, I'm hoping that we're seeing smaller and incremental improvements in the operating environment rather than anything that is going to be dramatic in that sense. If you leave the West African coast, you come down to Angola, very important province in that sense. There's 2027 elections that are coming in. Again, the idea is that we've seen over the last 7 years significant incremental change in terms of the improvement of the operating environment. With ANPG coming on board and taking over the concessionaire role, there is clarity, there's quicker sense of being able to award and allocate blocks. If at all you can hold people to account with respect to them driving some of these work programs. The jury is still open on a number of people who might have gotten some of those assets, but what we're clearly seeing is a lot of action which is happening. Nigeria, recently, a presidential decree, very important market, close to 2 million barrels a day, presidential decree to double down on the PIB in that sense and to be able to try and unlock and facilitate, more barrels being brought. So ultimately, what we are seeing, and this is across the continent in that sense, a renewed vigor in terms of saying, there is some kind of a clock with respect to resources being stranded and held down in the ground with all what is going on around conversations with energy transition and everything. So really, it's a positive. It's slower than what we would like at the chamber, but the operating environment overall, as well as the global discourse, when you look at, President Trump being in power, has somewhat changed. Unfortunately, of course, because of the crisis in Ukraine and some of these places, but there's a positive dynamics in terms of the operating environment in that sense. And it is in that backdrop that we kind of understand and place some of what these folks have been talking about. Meredith, I don't know who is going first, or Cody, Preston, sorry, I can't even say Cody, with respect to that. So thank you very much. We're looking forward to hearing what you say.
Thank you, Verner, and thank you for letting us partner with AEC on this report. It's been a privilege, and it's also great for us. We are consultants. We're part of S&P Global Commodity Insights, which most people know as a leading provider of data and analytics to the commodity industries. We're from the consulting team, so we actually work with governments and industry making these strategies happen. So we're really enthused about what we're hearing at this conference already. There's a real energy building around a resurgence for Africa, increased investment, and that's what our report's about. We refer to it as a cautious resurgence in the report. What we see is a lot of potential, a return to growth, especially in the upstream side. Africa's been at around 11.5 million barrels of oil of equivalent a day in terms of production the last several years. One thing that's interesting about this, even though production levels have been stable, there's been a growing percentage of that attributed to NOCs. So NOCs have grown from about 48% to 53% of production over this time. Well, thank you. We're also seeing an emergence of local and regional companies. I think by the end of the decade, they may represent 5% of that production. There's also growth potential. It's detailed in the report, but we see that there is potential for growth to get to around 13.4 million barrels of oil equivalent per day by the end of the decade. The reason we say it's cautious resurgence is because it won't be easy and it won't be cheap. This was presented in the plenary by Verner, and I don't know if you want to say anything more about this slide, Verner. Okay, well, the point was that, Africa's population is going to grow substantially by 2050, and also its GDP growing even faster, which is good news for the economy and the people. When we compare it to Europe, Africa's 2.4 times larger in terms of population today, but they only use 1/5 of the energy per capita. And by correlation, are also emitting 1/5 per capita of Europe. And we can't achieve this economic growth without an increase in energy. You see, the major bottleneck, we know Africa is resource rich. It has the supply side, and this growing population and growing economy is the demand side. So it's really connecting supply and demand. That takes infrastructure. That takes the development of regional markets, things like gas and refined products, and renewable energy and electricity and power cooling. So again, this is all in the report. So we're going to go through kind of the key highlights for the sector. In the upstream space, I mentioned the growth potential. So yes, we've been around that 11.5 million barrels of oil equivalent a day for the last several years. It could grow by the end of the decade. You'll notice a lot of that growth was back-ended. That's because if we look at the production that's coming from existing on-stream fields versus projects under development versus yet to be sanctioned projects, we're going to have to, we're going to be facing a decline if we don't include projects yet to be sanctioned. So that's the potential growth. This is a very typical situation around the world. Got a couple charts here for you. On one side, it's the top 5 producing African nations in terms of oil and gas production. If we only look at existing projects, we're facing a decline over the next 5 years. But that is a common situation around the world. There are many historically large, significant producing countries all facing decline. And without new projects, without new investment, this would be the future of the industry in these countries. But there's plenty of discovered resource. And this chart shows the growth potential from unsanctioned projects that could be brought on by 2030. We have an estimate of the capital required to develop those projects, and you can see it's quite substantial. These are just select countries. These are the countries that are, kind of facing this production decline, but also have the potential to return to growth if they can attract this capital. That's over the next 5 years. That's a lot of money. It's more than I have. And what's caused this to turn into a buyer's market is the supply of capital has shrunk. Ever since 2015, oil and gas companies especially have been prioritizing shareholder returns. So if you don't have something to offer one of these companies that they can make a better return on than what they already have in their portfolio, that capital is going back to their shareholders. So around the world, countries have been improving their fiscal terms in order to increase the potential return to companies so they'll take the risk, bring their capital, and develop these projects. So you can see from this map, it's become a buyer's market. There's a lot of competition for this capital. Many countries holding license rounds. We're definitely seeing this in Africa, and fortunately, a lot of countries in Africa have gotten ahead of this curve over the last several years. Already been preparing for this. Angola, Congo, Kenya, Libya, they've all improved their terms. You can see this map of countries that are offering licensing rounds, either already or plan to soon. And they're having quite a bit of success with this. So you heard in the plenary session, a lot of countries announcing license deals and hopefully more to come. The other reason we think this is a resurgence is Africa still offers the potential for high impact exploration, even in mature basins, but especially in frontier areas. Since 2010, you can kind of see back then, we've got a bit of the golden era of exploration in oil and gas. Oil prices were high, $80 to $100, or over $100. And there were a lot of new technologies, companies moving into the deep water, and the better imaging technology had quite a bit of success in exploration. Then when we were in the potential oversupply situation, starting around 2015, that's when the spending got cut back and exploration was hit quite hard. Why find more oil when we already don't have enough capital to develop what we've already found? So that's been true since then. But you'll notice from the line that the share of frontier immature exploration wells is going up. That's because we still need to find volumes, and these areas offer still the chance to make big discoveries. You've seen this all over Africa. It's across the region. We pointed out where some of the hot spots are here. So you've got Orange Basin in the south. Even in mature areas like Angola, we're going into deeper water. Mediterranean, offshore Libya and Egypt, a couple other, very attractive areas. So again, we say it's cautious because we are moving into more difficult oil. They are in deeper water, so there's some operational challenges. Also discoveries in remote areas or areas that don't have established oil and gas industry. So Mozambique, Sierra Leone, This makes it more operationally challenging to develop. And then we're also moving into more complex reservoirs, so a lot of HPHT, and the geology is often complex. We've seen that, for example, in Egypt with the difficulties developing the Zohr field. But we are optimistic. There's plenty of opportunity. Key thing, especially on the gas side, a lot of undeveloped gas. So I think I'm going to hand it over to my colleague, Simon Wood, who leads our gas practice, to talk about the potential for realizing that gas value in Africa.
Yes, thank you very much. And I think before we go into Africa, it's probably worthwhile talking about the global context for gas at the moment, because we're seeing a 25% increase in global LNG supply between now and the end of the decade. And most market commentators and analysts are pointing to a period of softer pricing in the gas market. We've had a very tight period since 2022, probably a record tight period, but this is probably ending in the next couple of years. And we're seeing global LNG prices fall from $12, $13 an MMBTU, probably down to $6, maybe $7 an MMBTU. Now, to many, that may be a challenge for producers, but there's also a massive opportunity for gas in countries such as, well, in continents such as Africa and emerging markets, as gas becomes increasingly competitive as a molecule. And if you look at our demand outlook for gas, and particularly the power segment, we see that gas demand in Africa is going to grow strongly out to 2020, 2035. But really where we need to see that growth is post 2030. Because if you look at where the value chain is for gas turbines, I think everyone knows it's very difficult to get a gas turbine order in between now and 2028, 2029. Huge demand is coming out of the States for gas turbines for AI, which is driving a huge amount of data center demand. All of that is driving an incredibly tight value chain for gas to power. But we do see those opportunities. And we're talking this morning about Richards Bay in South Africa. Potentially 2031, we can get the CCGT in place. Countries such as Africa facing a gas cliff, Angola as well, huge amounts of potential for gas development or monetization in Angola. That if you can build the downstream value chain, the molecules will be there to supply it. And maybe African molecules, but maybe international molecules. And moving on to where the gas is coming from in Africa, yes, you've got your traditional producers, namely, Algeria and Egypt. But they're actually experiencing their own challenges, increased demand for gas in Algeria from power generation, low reserve replacement rates. Egypt, of course, is reinstalled its FSRUs, it's importing a lot of that gas as well. But if you look at the tranche at the bottom there, which is sub-Saharan Africa, we're seeing sub-Saharan Africa increasingly important for gas supply, and in particular, not just for exports, also for providing those regional molecules for monetization in South Africa and neighboring countries. And that's something else that's been coming out a lot from our work we're doing. And again, I mentioned Angola, I'm going to mention Senegal, I'm going to mention other gas producing countries, is these solutions aren't national solutions, they're regional solutions. You need to aggregate demand on a regional basis and find infrastructure solutions on a regional basis. That could be pipelines, that could be gas by wire, that could be hub and spoke, small scale LNG solutions. So the opportunities are there and the molecules will be there. So move on to the next slide. I think I'm going to just talk through where we're seeing the value chain for gas in Africa and where we see the important focus over the next 10 years. And my colleague, Preston, has already highlighted the upstream economics there. We know the molecules are there. And therefore, if we can get the development concept right, it's not going to be cheap, it's not going to be easy, but the model is there. We also have increasingly favorable terms and more dialogue, I've described, between producers and governments around upstream and above ground risk, around E&P terms, improving terms for licensing rounds, etc. If you can get that in place, that is probably actually only half the challenge. For gas, the actual challenge is market access and offtake and downstream infrastructure. And from our perspective, what we need to see is a greater effort to de-risk the value chain. And I've mentioned it before, the emergence of national and regional aggregators to de-risk demand and supply. And if you can do that, you can attract the investment and you can get the creditworthy off-takers and creditworthy buyers to support the development of those gas value chains. And that's the increased focus we're seeing from our clients. In Angola and South Africa and elsewhere, is how do we create those aggregators that give both buyers and suppliers confidence to invest in that infrastructure? And that's probably the next stage. But as I said, if you want to get that gas value chain in place by the early 2030s, that alignment has to be now, because that value, because the lead time is 5 or 6 years to get that infrastructure in place. Thank you.
So moving on to the power sector, Simon's talked a bit about gas to power. But in terms of the power sector, we're very much seeing it's the same growth story due to the population growth, due to the economic growth. There's a big need for power across all sectors, from residential, commercial, and industrial. And we've talked a bit about gas to power. All fuels are going to be needed to meet this growth. So on the clean tech investment side of things, we're seeing a huge amount, up to $16 billion of investment per year required for clean tech investment by 2030. The big hotspots are really solar, onshore wind. We're seeing bits of geothermal as well as battery storage. But there is a significant growth in this area and opportunity in Africa, very much like the oil and gas side, and the critical mineral side is well endowed with natural resources to meet this. In terms of one of the hot spots that we explore in the report is actually on data centers. And Simon's mentioned data centers in terms of driving supply chain shortages in cobalt. Well, Africa is a fairly small portion of the global outlook, which you see on the right or the left-hand side. So we see the demand, or IT demand for data centers in Africa probably being around 2 gigawatts by 2030. So it's a very small part of the global market, but it's not inconsequential when we start to look at the individual countries. So when we look at Kenya, for instance, we're seeing almost a tripling in data center demand in between 2025 and 2030, which could be a significant portion of the grid and needs to be really planned for. South Africa is about a doubling. South Africa, Kenya, and Nigeria are really the kind of 3 hot spots in sub-Saharan Africa at the moment. So it's an interesting space to look at. It can be very much viewed as an opportunity for creditworthy off-takers that can help anchor new power project developments, but it can also pose a potential risk, as we've seen in other countries in the world, like Ireland, for instance, even the US with the grid. It can pose a potential risk if you're hooking those data centers up without that appropriate planning. The power chapter does go into the different power pools and the typical elements you'd expect for an outlook, but I thought I'd bring up the data centers as just a bit of a spotlight and something new. So moving on quickly, we do have also a section on critical minerals and energy transition in general for Africa. And with the energy transition, the renewable technologies, the EVs, even the copper in data centers, we see that the demand for critical minerals is going to increase by about 5-fold between 2035 and 2023. So it's a big increase in demand. And in terms of Africa, the resources are there. So they led last year production in cobalt, copper, gold, and the platinum metals group, or the platinum group metals, PGMs. And as you can see on the right-hand side here, in terms of reserves, they hold the majority of the manganese reserves, the PGM reserves, and the cobalt reserves. Obviously, to develop this requires a lot of energy as well. But Africa is really positioning itself to be a pivotal player in this space. So we've done a spotlight on the lithium market here. And at the moment, Africa has about 10% of the lithium market, but Zimbabwe in particular has 2 of the world's largest mines. It accounts for about 7% of global production. They are developing at an incredible pace. So over the next 6 years, or between 2024 and 2030, we expect more than doubling of lithium production in Africa, which again requires a huge amount of energy. We're seeing new projects in Mali and Namibia, Zimbabwe and DRC. So there's a massive push there. But what we're also seeing is more of a downstreaming or valorization in country, which will help drive economic growth, more employment. So Zimbabwe, for instance, has banned the export of your raw lithium. So it does need to be refined into concentrate. And then we're seeing, one of the first gigawatt factories in Morocco being built for batteries, leveraging that lithium and leveraging those critical resources, very similar to gas for the domestic market or, for refining to help with self-sufficiency are a really kind of big part of the report and the growth story for Africa.
Yeah, and just kind of build on that. One thing that's come out quite strongly is you need an anchor customer for your gas. And it really helps if that anchor customer is part of a value chain that has an intrinsic value in itself, because that makes the project increasingly bankable for the investors. So if you start tying your gas projects to mining or to power generation, if that power is underpinned by high load factors and guaranteed offtake, that makes that infrastructure that's associated with the gas value chain a lot more attractive to investors and far more likely to be developed. So what the point I think that arises from that is you cannot view any part of this energy value chain in isolation in Africa, and it has to be integrated. And those entities and those countries that can integrate those value chains and de-risk them will probably be the first to get the attract investment that's required.
Okay, at that, I hope you enjoyed the session today. I think we might have a few more minutes for questions, but if you'd like to download the presentation, it should be available to download. Just scan the QR code.
Thank you so much. I think we can give a round of applause for the team at S&P. So as said, we have time for 2 questions from the audience. Is there any questions from the audience? If there's any question, kindly just raise your hand and we'll pass on the mic. There are no questions, but please do feel free to interact once they go out of the stage. Once again, thank you so much, S&P, for such an insightful presentation. I actually had a lot of notes taken from the presentation. So again, let's just give a round of applause for them as they leave the stage.
Thank you.